Good afternoon, everyone, and welcome to the recap, hosted in conjunction with StockTwits. As always, I am your cruise director today, and I'm Laz, alongside.
I'm Taylor.
Taylor is my co-director today. We have a ton of questions. We want to get through it. I know there's lots of different, opinions about the market and where we're going, and certain stocks. So let's kind of jump right into it, Taylor.
Okay, great. All right, we're going to start with N-Tense. Hey, Laz, what do you think of gun stocks? Stocks include SWHC and RGR.
Okay, so Smith & Wesson, SWHC. Gun stocks have been on a nice move. It's been somewhat of a cyclical bull market here for gun stocks. Not widely followed by a lot of active traders. And something that is definitely fluctuates with sort of social mood, if you will, of the economy. So let's take a look here at Smith & Wesson. I'll pull it up, and as always, we're going to start with a weekly. I always like to look big and then narrow it down from there. So the Smith & Wesson chart here, you can see we've had a nice move from basically $2, a little above, to current levels just below $10. We're into resistance here. How do I know? Because we can see. Let's fix that chart. That's right, that's happening. So I would be very careful about being a buyer here. You don't want to chase price. For those of you that live on the stream, that follow my tweets, you'll know the one thing that I say commonly is don't chase price. And here's a good example. Why I like the action here, and I like the breakout, and I love the enthusiasm of the chart. I don't want to be a buyer up here at $10. I'd much prefer to be a buyer back here around 8.5. or even $7 to $8 area if you get that. At this point, you've had a nice multi-week move. Wait for some consolidation. Wait for these averages to catch up to the price of the stock, and you could see another thrust higher. What was the other gun stock?
It wasn't. Oh, RGR.
RGR. Another weekly chart here in RGR. Not a name that I'm too familiar with. Bear flagging. This is a very different looking structure. And this to me looks like it could break to the downside. So I'd probably be a buyer of Smith & Wesson on any short-term weakness, and I'd probably stay away from RGR. What else we got?
Okay, great.
Guns, bombs, what else?
Guns are set. We're all set on guns today. We have a question from Stet, who actually asked about guns as well, so I'm glad we got that answered. He's asking about NGD, New Gold. What do you think of it?
NGD. Not a symbol I'm terribly familiar with. Again, I'm sorry. I apologize for that. Lots of stocks out there. I can't know every single one of them. Probably something I would stay away from. It's got a nice constructive flagging pattern here on a weekly. Again, I'm looking at larger time frames. A little constructive, nice consolidation of this recent up move. But overall, it's still made, lower highs. So I'd like to see maybe some follow through here. Again, you could be a buyer. Run some tight stops in NGD right around $9, just under $9, $8.90, $8.80. So that's, this is, again, constructive action here in the short term. But overall, there's not much to go with. We've been in the same place we were. If you go back to even 2010, 2011, we're basically in the same place. So this is something that I don't think has that much reason to be involved. But again, if you're a shorter term trader, you could see a pop here to maybe 11, 12.
Okay, great. Our next question is from Jenny the Trader. Laz, at what SP level do you want to fade the rally? Thanks.
By SP, I'm assuming
SPY.
S&Ps. Let's take a look. At this point, I don't have much to say that I'm interested in fading. This is a weekly. Again, overall, the technicians are going to probably dig into a little bit of that, into this area of resistance. We do have this high back from March, April. We retested that high and failed. This is a tough place to be long. I'll be the first one to tell you. Being a buyer up here in the S&Ps is a tough spot to be long. The S&Ps, let's look at a daily now. Been in a very, very, very choppy type of pattern. We have a little bit of an uptrend in place here. We have some higher highs and higher lows. But you still have to be very careful of these upper and lower boundaries. When I say upper and lower boundaries, you have an upper resistance area over here. You have a lower support area down here. As we approach the upper end of this channel, it's going to be a tougher place to be long. Being long is, in this market right now is buying on, short-term strength. A pullback into these averages or into this lower band is a better place to get involved here for an active trade. But overall, you're in an area where you have, I'd say the risk on is a little bit greater being long here than maybe buying on a pullback. So I'd be very, very careful about what you do here. You also have this upper, trend line that we are slowly approaching. So in the S&Ps, we're coming into what I call a point of inflection, a point where you have, different areas of resistance all converging at one time. So keep an eye on this level. The other thing I would point out here in the S&Ps, looks like we're trying to make a beeline for this open gap. You see right here where I mark off this X, I'll make it bigger. Looks like the market might try push one more time into that 140 SPY area, upper 139s to fill that gap. But be very careful up in this area, as I do think, like I said before, this is a risk-on area. You don't want to chase price.
Okay, all right. Our next question is from Eric B. Hey Laz, last week you said you don't recommend high beta stocks for beginners. Are there any specific stocks you do recommend? Thanks.
Well, as opposed to talking about what stocks I recommend, and again, it's a tough question for me to answer only because not all traders are created equal. Some traders have smaller pockets of risk, smaller capital bases from which to work with. Some traders have, large amounts of capital at their disposal to use for trading, millions of dollars. So you can't really compare and make generalized statements because not all traders, like I said, are created equal. For traders that are, relatively new to the business, that maybe are not trading, a substantial amount of capital, I suggest stocks that are below $60, somewhere between $25 and $60. Those are stocks that you're still going to be able to make, you're still going to be able to capture price movement, but you're not going to put yourself at risk. Do I recommend trading Google or Apple or Priceline for somebody who is more in the novice camp that isn't quite experienced, doesn't understand, how momentum works, doesn't quite understand, how price action works, or even technicals? Probably not the best place to be, as you're probably going to take on larger pockets of risk than you can even fathom. So I don't want to make statements saying you should trade this stock or that stock, because I don't think that's the right thing to do. I never tell my traders in the active trader course, you must trade Intel, or you must trade Cisco, or you must trade this. I say, building a watch list takes time. It's learning different sectors. It's learning how, price moves. I think casino stocks, LVS is a good name to trade. It's liquid. It has good ranges. It's not we can take a look at it here. It's not, it's a $40 stock, but yet it'll move $1 to $2 to $3 on any given day. There's still opportunity in there for you for whether you're day trading or swing trading, but it's not the kind of thing that'll run you over. A stock like Priceline, again, that's $600–700 in price, will move 30, 40 points on a given day. And if you're not prepared for that type of price movement, stay away.
Okay, so on that note, actually, let's go back to LVS. We have a question from WebMizTriz. Can you cover the stops and levels for LVS?
The stops and levels, LVS. Okay, so clear downtrend. I'm going to do what I do all the time. I'm going to take the candlesticks away. Let me just adjust here so I can get the full effect. My little technique here. Okay, so I've taken away the candlesticks, and now you're left with just moving averages. Below a 200 EMA with declining 21, declining 8. Stock's in a downtrend. This is a weak stock. Now, the one thing I'll say is that we're into support. I'll put the candlesticks back in. You're into an area of prior support. How do I know? Well, we look to the left. As we look to the left, you can see that this is an area where you have, buyers. There's been demand, whether it's down here at 35 or in here. This is the general zone where there's demand for the stock. So could we anticipate maybe a little short-term bounce here? Absolutely. At this point, if you're looking to the long side, and I assume that's where this question, is headed, you could be a buyer down here in the $40 area, depending on your time frames and your risk tolerances. I wouldn't really want to see it get below these prior lows back here around 30, 36, 35. So you can run, that type of stop on it. On the upside, you could probably get some retracement here. This is still not a clear-cut buy. This is still a stock that every time we've seen a short-term pop, we've seen to make new lows. Pop, and then we rolled over. So just because we saw a green day today, We're still into a declining 21. I like the way it closed today at the 21. This tells me that on a short-term pullback, maybe if you can make a higher low here, you could look to be a buyer. So I'd probably trade this zone down here against these lows, 39, for a long. I don't suspect you're going to get more than maybe a trade into the 200 EMA. So I would keep that here on the radar, which is in the upper 40s. So is this a A-plus trade? No, it's not an A-plus trade. Is it something that I think you can track and watch over the next couple of days to get a feel? Yes. So keep it on the radar against that 39.40 level for a oversold bounce.
Okay. We have a question from Marvik. Hey Laz, do you consider Facebook price action on Tuesday and Wednesday to be a red dog reversal? If so, can you expect a quick run to 30.31?
No, it's not a red dog reversal. Red dog reversal by strategy is a stock that's had a multiple day or a multiple bar directional move. So we don't have that here. What we have here is a break of support. When we talked about this, I believe last week in the Q&A, we clearly undercut that 30 level, and you saw that that momentum trade. 3-day bounce, which is common, into these declining averages. I would watch to see what happens over the next couple of days, as this stock could make another push and retest that 26 area. This is not healthy price action. Breaking down, breaking support as the market sits on highs, getting this little, 3-day bounce, which is common, into a declining 8. This is something I would watch for further downside. Could it get back to the 21 here at 30? It could, but this stock to me, until it really muscles and gets back above this area in the low 30s with volume, there's no reason to be long Facebook. All
right. We have a question from D. Lang. What do you think of ARNA? Is a good short since Viva's drug has been approved?
I'm not really going to get into the fundamental story here, as it's not my specialty. So certainly my take on the news on these drugs and a lot of these biotechs is not worth a lick, and I wouldn't even pretend to play that game. What I will tell you is we can evaluate price action and what the market tells us about the movement of price. I don't love this topping tail right here. This is you go back in time. This is what, 2 weeks ago, 3 weeks ago. We had this big tail down. We got a little bit of retracement here, and then we started to turn down again. To me, this trade is over. I wouldn't be a buyer. I don't necessarily know that I would be short this stock either. It's a news-driven, headline-driven type of stock, and it is subject to large price fluctuations relative to the news. This is something that, for me, it's really more about day trading these type of symbols than it is swing trading. I'm not here for the longer story. I'm here for the price action and what happens, potentially over the next week, 2 weeks, 3 weeks. And until the stock gets above the $12 mark, I probably wouldn't be a buyer, and I wouldn't be looking to pick a bottom, because this is something that can, be a very, very painful trade if you're on the wrong side.
Okay. We have a question from Toronto Shark. What do you think of UNG here? Looks like a breakout of a W base. Decent pickup in volume as well.
Okay, so let's take a look at natural gas. I like natural gas. It was in this long, severe downtrend. Again, this is a weekly chart. Just getting a broad's eye stroke. Finally got back above its 8, which you can see had really been in control of the trend. Got back above the 8, pulled back. Now this is where it gets interesting, made a higher low. You can see our lows, makes its first higher low and turns up. I like the stock. I think it could give you more upside, maybe into this prior pivot just below 25. I would run stops real tight at this point right here on this low from last week, which was 1850. So if you can weather the risk here and you can nimbly get in and get a good price, I like this trade for one more push up into the this prior pivot zone, which is around $24. Not great risk reward, but if you can get this stock closer to 20 or 1950, much better entry price.
Okay. We have a question from Dwayne 800. Why is the VIX holding up so well in this rally?
Let's take a look at the VIX.
VIX.
Yeah, sorry.
Huh.
Let's see.
Technical difficulties here.
Nope, I know the problem. It's me. There we go. Here's the VIX. Now the VIX is really just a measure of sentiment, and what it tells you is that, you know, there's complacency in the market. It's not, you know, I don't believe that the VIX in and of itself is a great trading tool. I don't think that traders should or need to spend a lot of time, again, this is my opinion, trying to trade the VIX. What it does is it tells you when markets are, you know, volatile and when they're a little more complacent. When the VIX is low, which it is right now, you know, it's a measure of complacency. And I don't think that there's a trade looming here. The way I like to trade the VIX, and I'll show you here, again, just a little special sauce here for the StockTwits community. I like to trade it. I like to keep an eye on the Bollingers with the VIX. And I'll put the Bollinger Bands up. When the VIX closes outside of its bands, excuse me, you can see the closing bars outside of the Bollinger Bands, up here, they're usually short-term reversal signals. So, and we can go back, and you can look at every time the VIX has closed outside the band. Here's an example. It then turns down. The VIX closes outside the band down here. It then rallies up. It closes outside the band here. So I like to use the VIX as a way to, you know, anticipate large change of price direction. So again, if I'm giving you a little, you know, like I said, secret sauce, really I only use the VIX this way. It's not a trading tool for me. I know that when the VIX is low, markets will generally be a little more ho-hum. When the VIX is high, when we start to see 30s and 40s in the VIX, there's lots of volatility and it's a day trader's paradise. Right now, it's sort of the opposite of that, but I am looking for a potential close outside of this lower Bollinger Band. That, to me, would be a potential signal that the market would or could reverse.
Okay. We have a question from Market Picker. TPX, as a trade, it's in a gap. Do you think this is a good long base trade? Target 1, 50 MA. Target 2, the gap fell to 41.
Okay, well, let me take the Bollingers here. I don't use the 50-day MA. I'm not a believer in it. You could probably substitute the 50 with 100 or any moving average for that matter. My approach, the active trader approach, is consistent among its moving averages, 8, 21, 200. We don't deviate from that. And the reason being is that you could probably overlay any moving average on any chart and find something that fits. So, you know, and that's a it can be a very, very destructive way to trade. So as far as the 50-day MA, not necessarily something that I would consider. You know, the chart here has gotten more interesting. It's a broken stock. We can look at the weekly. You can clearly see it's broken. A little bit of a reflexive bounce. Really no impulse here. I would say a trade into this 8 period here on the weekly would be my first target. And then the 200 here on the weekly would be the second target. So as the numbers stand right now, it's about 30 and then potentially 40. If we go down to the daily, again, 30 would be my first short-term target. Remember, this is still a broken stock and has to be treated as such. And this, you know, broken stocks, broken charts ultimately take time to repair. What goes straight down generally will not go straight back up. It's a broken chart. It will need time to repair itself. It will need time to build a base. It will need time to tell you that, hey, the waters are safer here. Buyers are stepping in. We now have a long-standing base. And that's generally how it works with stocks that look like this. They're not just going to go straight up, you know, and fill these gaps. However, that being said, you have a nice, you know, tradable low here at 20 bucks or just above. The stock has found, you know, a short-term bottom. It's starting to rally back up. You don't want to chase this kind of price. I'd wait for a 2 to 3 day pullback here or a nice basing pattern in this 25 to 27 zone. Wait for some more constructive action before you just get involved long. I like the long, but I am cautious about the upside. $30 would be my first target, and if you can see $30, I'd be a seller because into the weekly, that's into the declining 8, and for me, I know that that'll be the first stop.
All right, let's take one more before a quick break.
Definitive, Taylor.
Very definitive.
That's how we do it.
That's how you are. Our next question before a break is from Medic E11. Scott uses an oscillator to determine overbought and oversold conditions. What oscillator does he use, and what are the indicators?
Well, the first indicator he uses is the Red Dog oscillator.
It works.
That's our first indicator. when all else fails and the red dog who let the dogs out indicator doesn't work, what he's really talking...
Oh.
You got to stop, man.
Listen, once you get it started.
There we go. So the McClellan oscillator, that's really what he uses. And I don't believe I can pull it up on eSignal. But the McClellan oscillator is what he uses. And basically it's a way to measure when something is extremely overbought, a market is extremely overbought or extremely oversold. And a lot of contrarian traders, those that are looking to short uptrends or buy, down moves, will use that indicator for short-term trades to try and nimbly carve out reversals. It is something that's been effective over the last couple of years for traders. It's been very effective for Scott. It's been very effective for a lot of the traders at T3. But unfortunately, I don't have the visual here to show it to you. But if you, I'm sure, go to Google, you can probably find a way to dig it up. It's the McClellan oscillator.
All right, great.
Outside of that,
He
uses. Sorry, I want to make sure I answer the question thoroughly. He uses the same moving averages that we use throughout all the charts: the 8, the 21, and the 200 EMA. Sorry, go ahead, Taylor.
I was just going to say we're going to take a quick break, and we'll be right back.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there's no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
All right, we're going to switch it up a little with Pete here. We have a question. Do you want to say hi?
Hello, everybody. I did the recap last week. Everybody should know me by now.
All right. All right, great. So we're going to start off with Eco Elite. Hey, Pete, what are your thoughts on JP Morgan and the impacts in the market of weak banks?
Well, in the mentoring room every day, I've basically been talking about the same thing about the stock. It can't clear 36, can't stay above 36, regardless of what you see right now, whether you're a chart or whether you're a fundamental, reading the news, reading it to 2 billion, 4 billion, 9 billion. At this point, it really doesn't make a difference. 36 is the level. Right now, it's trading between 34 and 36. If I was in the mentoring and working with you right now, I'd say the same thing. It's got to get through 34, through 36, regardless of where you're getting a catalyst from. Let it get out of there, let it tip its hand, then get involved in one of those sides. Just from a pure technical perspective, we're still in a longer-term downtrend. We've consolidated that downtrend now for roughly 4 or 5 weeks. If I'm working with you right now, if I say I'm going to lunch, don't do anything until this stock does this, I said let it clear 34, let it clear at 36. But if I was going to be a little more aggressive, it would be if it broke down below 34.
Okay. All right, great. We have another question about the banks from DZJZSN. What are your thoughts about Wells Fargo?
Wells Fargo, actually, there's been a couple that have been pretty strong. Wells Fargo and Capital One, both of them. I like this a lot. All the time frames are pointing in a direction where you'd like to see it finally push through this level. I like it long, but I don't like it long here. One of the things that we discuss quite a bit is yeah, I might like it long, but do I like it long now? And if you can see, if you look to the left, 3450 is a pretty significant resistance going back for about 5 months now. And from a candlestick perspective, we're starting to see a lot of topping tails or wicks up here. Now, whatever you call it, dojis, there's 8,000 things you could possibly call it. The bottom line is it represents indecision at a resistance point.
Okay.
So something we talked about this morning in mentoring is if a stock breaks through a level, how much time do you give it before you get involved? So in other words, if let's just say, for argument's sake, 3450 is the level we're looking at, do you get involved as soon as it takes out 3450? As soon as it goes bid 3450? As intraday traders, do you nail it and have a buy stop as soon as it gets there? The real answer to me is the more obvious the trend prior to the breakout, the sooner you can get involved. So whether it's a breakout and hold on one candle, breakout and pause, breakout and consolidate, completely depends on how obvious it was prior to the breakout. So in this case here, I like it a lot over 3450, but you can see we're seeing some indecision up there, so I'd wait for a little more confirmation above that level.
Okay. It's a good thing we covered that, but I read the wrong stock. He was actually asking about WFT.
WFT.
Sorry about that.
That's quite all right. Again, I am very big on, let's say, for example, we take the moving averages out of there. What has this stock done in the last 7 weeks? It's trading between 1150 and 13. There is zero edge here unless you're somebody who trades buy support, sell short resistance, and if it breaks out, you stay away from it. I don't see anything going on here. Again, take the moving averages out of there. Where is the edge? Can you look at the stock right now and say buyers or sellers are definitely in charge? The answer here is no. Let it tip its hand, get out. If it finally does, looks like 1442. It looks like the next level above there.
Okay, great. And Pete, I know you wanted to talk about some strategies, so maybe we can go to you with that now.
Yeah, actually, I want to touch on something that I receive a lot of emails in the mentoring is what does Scott mean when he talks about tactical trades versus a strategic trade? And I think a lot of people have a misconception. I guess, Taylor, you're a trader as well. I could go, maybe we can have a little discussion.
Sure.
Let's say you want to be a long stock today and you really like it long and everything is pointing towards I want to be a buyer of the stock.
Okay.
And this is mostly a newer trader question. Let's say that's a strategic long where everything is lining up. You want to be long, you like the stock, and the stock has a downtrend the whole day.
Okay.
Most new traders will say, well, you got to take advantage of it. It's a must short. But the whole case you built for the 14 hours coming into the day prior to that is you want it to be a buyer.
Right.
Would or should new traders short that stock or let it go and only be long?
That's a good question.
So it's a B short but an A long. It's a tough question.
It is a tough question. If it was me, I would probably let it go.
And that's what I recommend most new traders do. Here's the point. When you have a strategic play, you're saying the probability is it's going in that direction of my strategy. In this case, we want to be a buyer of the stock. So if you're looking to be long and the stock is doing the opposite, which we'll classify right now as a B sell short, or something that is not in the direction where you spent all that time coming into the day saying I want to be long, it's best for a newer trader to stay away so they start to believe in the strategy and the probabilities and let it go. It's okay to let a trade go even though it might have had a really solid opportunity. I'll give you a perfect example. How many times in the last month or so have we hit new lows and buyers came in and shorting the lows have not been the right trade to make?
It's been tough.
It's been very tough.
Yeah.
So you must stick to your strategy all the time, not sometimes. So when Scott mentions he's taking a tactical play, what that simply means is he's admitting it's not an A long or a strategy-based long, but he has a pattern and a risk point. So he's going in with a lower share size on the pattern without the big picture, so to speak, behind it. So I want to make it very clear, when he's talking about a tactical trade, he's basically saying it's not one of those A-plus trades, but there's definitely a risk-reward that's recognizable and a clean entry signal. So you as a trader have to make a distinction between your A trades and whether or not if something that might be unfolding on a shorter-term basis is against your A trade strategy and whether or not you take it. And my advice would be newer traders should let it go and just stick to the A trades, and it'll be a lot less stressful, I guess.
Yes, I would think so.
Okay. All right.
All right. Thanks so much for that. That was great. All right. Let's go to a question from LeVay Co. at T3 Live. Well, this was for last, but talk about MLNX after earnings. Next target 100 or too big a breakaway gap.
Well, let's go out to the monthlies first and see. clearly we're in an uptrend in multiple time frames here. If we start on the monthly, go out to the weekly, everything you could possibly want. This is actually a very interesting question because you're literally off the charts here. Not so much the newsletter we put out. And new traders always want to know when I'm clearing a level and there's nothing left. In other words, there's nothing above me or nothing below me to say that's going to be my target. How do you manage that trade? How do you say, well, I don't see the spot, what do you do? This is when you literally have to start dropping down to your shorter time frames and notice what we'll call a failed test. In other words, we push up, you pull back, and then you push up again, and you got a nice fluid motion to the upside. In this case, we don't. So what is your risk here for getting long? How are you measuring your risk? And just from a technical perspective, you're usually looking for a gap fill, or in this case, today's low as the area that you'll be measuring. So if you can find a spot to manage risk and you still like the long, you can look for the long. But the longer to the upside it goes and your risk point starts to get further and further away, it's very tough to judge the risk reward. So when you're literally off the charts like this, it's not so much that where could it go at this point. At this point, we obviously feel like it's a long because of the gap, and we've been in multiple time frames pointing to the upside. Measure the downside in the direction of the long in this case. If intraday or short term, could be a swing trade, whatever it happens to be for somebody, as long as you can measure the downside, you could still take the risk. It's worth the risk on the long side if you got the downside covered.
Okay. Our next question is from Erica Lex 97. What do you think about KO?
KO. Well, I'm seeing two things here. We had a really nice push up the first week of July into the holiday. Maybe it was because of the holiday. Who knows? You know, all the soda being drank. We finally got through this level here and have not been able to get back above there. And so there's two things that's going on here. Has the pressure that pushed through there subsided? And do you get involved at a level that was not able to hold? So again, I'll go back to mentoring. If I'm mentoring somebody right now, I'm saying we just pushed through the 77, 75 level, couldn't quite hold above 78 for more than 2 days, pulled back in. So you have the very obvious level that we finally pushed through and immediately came back within that level. I would not, myself, again, all back to my own personal trading, if I was looking to get involved with this, I wouldn't until we cleared the most recent levels, which looks like it's around 78, about 79, right in that area. Because the reward is one-to-one here to the most recent level where sellers did something significant. So if you're going to take trades that are one-to-one, you're going to be a break-even trader. You want to set up trades that make sense where does the risk justify the reward? And in this case, if it's one-to-one, it's not really worth it, to me personally, until it takes out the 79 level.
Okay. Our next question is from Jenny the Trader. When you day trade, do you watch the level 2 or time and sales?
Yes.
Okay.
Actually, it's a very interesting question. I'm going to add something to that from just a day trading perspective. Level 2 in time and sales meant a massive amount more when things were in fractions, obviously. However, what you do want to notice, and this is more from a time and sales perspective, which for those of you that aren't aware, it's basically time and sales are the trades that are happening. And in time and sales, red prints generally mean active selling pressure. Green prints mean active buying pressure. Now, technically, is it a higher or lower print? Sometimes this trade's literally in between the pennies, so it's not read correctly, so that's why I put it in there generally. So the more consistent the green prints, there's active buying, somebody stepping up and saying, I have to pay somebody else's price, more consistent red. So when I'm watching level 2 in time and sales now, I'm more concerned with the consistency of the prints than actually trying to read every one of them. We all know the algos are out there. They're printing 100 shares like crazy. So you really can't read the individual prints and add it up. So I'll give you two things. Number one, watch the consistency of the prints for it to be active buying or active selling. And number two, from a day trading perspective, without even necessarily needing to go that hard into it, I mentor every single day paying attention to the opening price. The opening print and whether a stock trades above it or below it is one of my main points of reference for intraday. So for example, if you want to be long a stock and it's trading below today's opening print, that means today they're selling in the stock. So as an aside to that, if you want to be long, come into the day and it's trading below, set an alarm for the opening price so you're alert when it trades back positive on the day. The intraday price action, which you'll see in time and sales, will be confirmed, will confirm what you had in the longer term picture.
All right,
so
great.
A very easy way to do that.
Great. Thanks so much for joining us, Pete. We're going to take a quick break and we'll be back with Laz.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
I'm good.
Okay, we have a question from Dwayne 800. I sold my Bank of America at 931. Is it time to go back to a tier 1?
Is that a question for me?
That is a question for you.
Oh, okay. Good.
It's Laz.
Because Pete left and now Laz is back. All right. And I generally don't refer to myself in the third person except when I do StockTwits. Bank of America, dog and heat. Forget it. It's not worth it. It's a horrible looking chart. I really strongly caution banks, bank stocks, financials. It is a very, very difficult sector to maneuver. There has consistently been an outflow of money. If you look at the chart here in Bank of America, and this is a weekly, we can even go out so far as a monthly. I mean, there's just an outflow of money here. This is money pouring out of the stock, not money pouring into the stock. So when I see a chart like this, you have two choices. You either stay on the short side and you short bounces until that trade stops working, which at this point it has not, or you stay in cash. They're the only two trades that I see here. Everybody that's tried to buy Bank of America, yes, you may be right for a day or 2 days or 3 days, but over the last 2-3 years, it has not been a good place or a money center for the bulls.
Okay, we have another question on the financials while we're on that subject. This is from, I think, Pate Lug. I love the name. Hey Laz, can you look at the financials, Goldman Sachs and JP Morgan? Also, credit cards, Visa.
Okay. We're looking at monthlies here. We're just getting sort of that. When you ask me to analyze a sector or a stock or a group of stocks, I always start big, weekly, monthly, what have you. I like to get a general sense of money inflow or money outflow. Once I can make that initial statement, then I'm going to look at smaller time frames. I'm going to go to weekly, daily, hourly, so on and so forth, until I can get to the place where I can clearly identify where a trade may or may not be. In this instance with Goldman Sachs, again, it's that outflow concept. Money is not flowing in here. You're going to get little bounces along the way. But like Bank of America, there is it's a consistent lower high. Every bounce is just a lower high and then it gets sold. So long as these averages, the 8 and the 21, are still trending down and every bounce into the 21 gets rejected, which is essentially what happened here, it's a trade I'm going to stay away from or look to be short. This to me is not setting up as a long. Even on the daily, I talked about a breakthrough 100, I think it was last week, in this area, break out of this range, and the stock tried 3 days ago. But what you want to see is a stock break out of a range and volume come up. You don't want to see it gap out of a range and sell back down. This is not healthy price action. And this stock, to me, if it takes out 90 bucks, is headed probably much lower. As we've been in this base for now 2.5 months, and a break of this base could spell, the $70 mark in Goldman Sachs. So we're going to keep an eye on that trade. Now at JP Morgan, right? Was that the other one, JP? Yep. JP Morgan, I'm not a fan. Again, falls into that whole sector. I don't love this sector. It's a great if you're a bear. It's been a good trade for bears. Selling bounces has been the trade. Any short-term rally has been sold, and you can make money on that trade. Trying to pick bottoms, it's a losing trade. It's not going to make you any money here. Stay away from it, and I would stay away from this one as well. Even with earnings, they reported earnings, 3-4 days ago. We saw one green bar post earnings, and then we're right back, below. We couldn't even hold that one day of good news, with earnings. So the market's telling you something here. The question is, are you listening?
Speaking of,
you like that dramatic effect?
I like it.
That was nice.
Did you cover Visa?
Oh, Visa, sorry. Visa's been a good stock. Visa's been a good trading stock. Visa, wild gyrations. Day to day, you can see these large price movements starting to happen from 120 to 130, back to 120. Large sort of volatility here. But overall, it's been a strong stock, and buying dips has been a profitable strategy. At this point, if you're looking to be a buyer, I'd like to see the stock hold the 120 mark. So any short-term pullback into here, you could see one more pop. On the weekly, if we go up a time frame, still looks good, still in an uptrend on the weekly. So all things considered, still a good-looking stock. I probably would want to see some short-term weakness before I stepped in to try and be a buyer. It should hold 120. If this 120 level gets breached, something potentially could be changing here.
Okay. Our next question is from Shady Capital. What do you look for to spot an intraday reversal trend?
Well, there's different ways to spot reversals. There's different indicators you can use, but above and beyond any indicator, what I really like to look for in reversals is pattern. So intraday, what you want to see is pattern. Usually intraday reversals will come, and I'm going to go to the whiteboard here. Let's call this the whiteboard. We're going to look at the whiteboard. Generally, your reversal patterns come in a couple different shapes and sizes. You have stocks that go from strong to weak, right? And generally, if a stock intraday gives you like a U-shaped pattern, where basically, it builds, it rallies up, finds a resistance area. I'm trying to teach here while I maneuver, and then starts to U down. So what you have is an upside down U. These are generally very good reversal patterns, and they can produce impulsive downside moves, and vice versa. If I flip this upside down and it's a U, a regular U, those can be very, very good indicators of reversals intraday. There are some other patterns I like to look at. There are what we call ascending wedge patterns, and they're basically 5 waves to the upside, and they basically look like a giant, wedge type pattern. And when they break, they tend to break very hard. Little more advanced of a reversal pattern, but then those are examples of how I use pattern to dictate or to find or spot price reversals. The other thing that I use for price reversals, and I'm trying to think of a good one here, is I'll use a MACD, and I like to look for divergence between price and the MACD. A little bit more advanced of a topic, something we talk about in the latter part of the active trader course, and not something I really want to get into here, as I don't want to confuse anybody. And generally, you have to achieve a certain level of information before that MACD reversal strategy works. But most of the time, 9 out of 10 trades that I look for reversals will have a pattern, intraday reversal pattern, to support the reversal. Today we talked about, in the active trader room, ORLY. And this is an interesting looking chart, filled its gap, broke down here. And I said that in this area, when it fills its gap into this area, there was no exact price, you would probably find resistance and there would be price reversal. So if we look at a 5-minute chart today, you can see the stock opened, rallied up into that resistance area and completely reversed and took, and took out the lows. So you got that momentum sort of impulse trade. That's an example of what we look at. Now, if you look at a 2-minute chart, again, same stock, you're going to see, let me go back to the morning. There's that upside down U where it sort of rallies up. You throw a ball up in the air. At some point, it can't sustain itself. It's going to fall, and it's going to pick up speed to the downside. And the trade here was really through that opening low, which was right there. And you got that fast, reversal. So that's an example. I'm being a little long-winded here because reversals are not easy to find. They're not easy to trade. And those of you that are reversal traders are constantly looking to short strong stocks or buy weak stocks, it's a very, very, very tough road that you travel down. But there are ways to do it. You just have to let the trade develop.
All right. Our next question is from Highlander TX. Laz, can you talk about how you use time frames, please? Do you always manage both your entry and your exit on the same time frame?
Well, the second part of the question is yes. My entry and my exit are always on the same time frame. It just makes your trading a lot more structured. It prevents you from what I call the lost day trader syndrome, which is basically the day trader that gets into a trade, the trade starts to work, they get very excited, I got long, the stock started going up, and now it's not a day trade. Oh, I'm going to hold this one. I'm going to hold it. And now they're starting to look at daily charts and weekly charts, and they think that they've stepped into the greatest thing in the world. And I see day traders do this all the time. It is a very, very, it is a strategy that can bring ruin to some, because you're losing the perspective of what you're in it for. If you're trading off of 3-minute charts, stay in the 3-minute chart. If you're trading off of hourly charts, stay in the hourly chart. If you're trading off of weeklies, stay in the weekly. live and die in the same time frame. It's going to make your trading a lot cleaner, a lot more structured, and a lot more objective. The first part of the question, I'm working in reverse, part A, which was about time frames. You know, unfortunately in this forum, I don't have all the time in the world, and time frame analysis is something that is very difficult to teach, but one of the most important facets of technical trading, if not the most important. And it's something I spend a day teaching in my active trader program. You know, if you're interested, go take our 30-day at-home trial, take the active trader course. You're going to learn about it in a lot more detail and a lot more depth in a much better way than I can do it here. I'd be doing you a disservice if I tried to explain it in a 5-minute or a 2-minute answer, and I'd probably lull everybody to sleep, including Taylor over here.
I mean, I took it. I loved it. I'd be lost. Okay, our next question is from Market Picker. This is about HOG. A better short with the head and shoulders top starting back from early March, or a better long after bouncing off the 200 MA?
Well, I think, you know, again, let's look at it this way. It's a better short, and it's a better short because what is a downtrend? A downtrend is really a series of lower highs and lower lows. Lower high, lower low. Lower high, lower low. So the stocks, you know, the stock's in a downtrend. It has declining averages. To me, it's a better short. I generally find that if you stay on the side where the trend is, you're always going to be a little more protected. So to me, it's a better short. It broke key support over here. You know, it did its classic break of support. I love this trade where the stock breaks support right here, snaps back. This is the trade that kills everybody because everybody says, oh, it just broke support. And when it breaks support, that's not when you want to short it. You short a snapback because the next time it comes down, it will go lower. There's room for this stock to go lower. I would say your first level of support probably isn't going to come in until down around $40. So I think the stock has more downside. I wouldn't be a buyer here. I'd actually be looking to short a bounce into a declining 21 EMA around $45, $46.
Okay. We have time for 2 more questions.
2 more.
2 more. Our next question is from Gilgal Markets. Do you think the SPY will go this quarter to new year highs?
You know, I deal in reality. I deal in what's happening objectively. I evaluate price. I don't deal in assumptions. I don't deal in forecasts. I don't deal in guesses. So if we talk about the SPYs, and we talked about this a little earlier in the program, you know, I have to be respectful of the fact that I have a level of resistance here that's been tested now, what, 2 or 3 times. There is supply over here. Just blindly saying, I think that we go to new year highs, to me is not, you know, it's not the smart approach. What is the smart approach? The smart approach is evaluating what is happening here. We're making higher highs and higher lows, right? But you have to be very careful about buying new highs. If you bought new highs over here, you would have lost money. Buying new highs up here can also be a very dangerous trade. You have this upper band that I talked about before and this lower band. And you have to play the boundaries here. Play the resistance, play the support. Regarding, you know, what I think about new highs, or, you know, it's really irrelevant at this point. If the market pushes to new highs, we'll evaluate at that time and we'll make good calculated decisions about risk, right? Risk?
Yes.
All about risk at that time. Me throwing out statements is really just a waste of everybody's time, including my own.
All right.
And I mean that in the nicest possible way.
Totally comes across like that.
Sorry. But
it's tough love.
Everybody asks me, you know, I get emails
Yeah.
on Twitter and the website, you know, what do I think of this? Or do I think the market? It doesn't matter what I think. It doesn't really matter what anybody thinks. What matters is what price tells us. And I think the sooner that you can get that ingrained in your head as a trader, the more objective and flexible you're going to be with risk. Because at the end of the day, all that matters is how to mitigate risk. Your opinion about the market, your opinion about Europe, your opinion about the Fed, it doesn't really matter. So I don't, you know, I learned my lesson a long time ago. I don't deal in opinions. I deal in exacts. You know, it's great to have a plan in place. It's great to make assumptions, but have those assumptions be, you know, objective and based on data. Okay. And that's all I got to say about that.
Okay, we're going to finish up with one last question from Cuban Mark. Laz, do you think CMCSA has more upside, or would you get out here at resistance?
Do you think it's Mark Cuban? Or do you think
Cuban
that
Mark.
it's a Cuban guy named Mark?
I don't know.
It could be a
Is
woman.
it Spurls?
Could be. Well, Cuban Mark Cuban, whoever you may be. Comcast, I moved on Monday to a new home, and I had an appointment set up for Monday, and they were there in the desired window, which was great for me because usually they're always really bad at that stuff. So because of that, I think the stock goes higher, and I'm sending out 10 booyahs to Comcast for coming on time. I digress. The stock has been in a nice uptrend. Let's take a look here, weekly, monthly. Yeah, it's cleared all its prior levels. You know, looks like prior highs are not in the too distant future. That being said, let's take a look at the daily. A little bit of indecision here at prior highs. You see it tried to get through the prior pivot. Didn't quite have the muster to close above. You might see a little bit of a pullback here. Overall, still very much intact. Just needs a little more time. I'd be a buyer on short-term weakness.
All right. That's all we got for today.
My Comcast joke didn't go over too well.
I mean, it was a tough
I
one.
tried. Can't be everything. Trader, educator, comedian. I tried.
All right, well,
Is
do
that
you want to
it?
wrap it up? Yeah, that's all we
That
have
was
time for
great.
today.
I loved it. I love the StockTwits community. You know how I feel about each and every one of you. Keep your questions coming. If you're here, it means you're interested. If you're interested, it means you are trying. If you're trying, keep learning, keep pushing, keep doing what you do. You're beautiful. And we will be back tomorrow with the morning call and on the VTF and all the good things we do. And have a great weekend, everybody.